I wanted to jump on here real quick and make a video showing you how I'm personally handling this volatile stretch in the stock market right now. Because at the time of recording this, I'm down 4.18% in my 401k, I'm down 0.7% in my taxable brokerage, and I'm down 2.6% in my Roth IRA. Whether you're brand new to investing or you've been doing this for a while, I don't want you getting spooked by short-term volatility, because this is actually where a lot of long-term money is made, as long as you handle it the right way. In this video, I'm going to walk you through why I'm not worried at all about this specific market downturn and how I'm actually using it to build more wealth over time. Leave a comment down below what you are investing in during this market downturn and how your portfolio is looking year to date. Let's get into it. So first off, you got to zoom out and look at history. Because if you stay too zoomed in on what's happening right now around the world, it's really easy to convince yourself that this time is different, and this time everything's going to fall apart. Social media is not helping that, because I swear I can log into Instagram and see a freaking ballistic missile taking out a high rise. And to me, social media has just really desensitized us to what's happening. We got to remember, this is halfway across the world. So social media can really amplify the fear in the world and make you feel like we're never going to get out of this. But we've seen this exact movie play out before over and over again. Think about when COVID hit and people thought the entire economy was going to collapse forever. Or in 2022 when Russia invaded Ukraine and everyone was talking about World War III back then too. Or even more recently with the tariff scare that we saw, and the market pulled back so fast, and I think I saw the S&P 500 drop by more than 4% in a single day. It was crazy. Every single time there's uncertainty, people will panic, money will move out of the market, and then over time it recovers and the market just pushes on to new heights. That's just how this shit works. Wealth is constantly transferred from the impatient investors to the patient investors in moments just like this one. So the real question becomes, what are you going to do when things feel uncertain? For me, I'm using this as an opportunity to double down on the exact same investments that I already believe in, which for me, those are VOO, SCHD, and SCHG and XLK. I'm not chasing anything new. I'm not trying to time the market. I'm just leaning harder into what I already own. So when an opportunity comes like this and everyone's panic selling, you know what I'm going to do? Use this opportunity to build long-term wealth. I've already increased my 401k contribution from 7% to 15% this year. I'm planning on using any leftover cash at the end of the month to add into my brokerage account. And I'm making sure my emergency fund is fully in place so I can invest confidently without stressing out about the short-term expenses. And because I'm dollar cost averaging, these downturns are actually some of the best times to be investing. Because when you dollar cost average, you're consistently buying everything currently at a lower price, which sets you up so much better for when things begin to recover. Now, I don't have a crystal ball, and I'm not going to sit here and tell you that nothing bad can happen or that the market couldn't go lower from here, because nobody knows that at all, and the market can certainly go much lower. But what I do know is that historically, the market has always recovered over a long period of time. So I don't want you making emotional decisions and pulling money out of your investments. And I definitely don't want you recklessly throwing all your cash into the market either and leaving yourself overexposed. But what I also don't want for you is to also just sit on the sidelines and watch the market recover, and then regret not taking advantage of an opportunity to buy the exact same investments that you already believe in at a discounted price. And one of the reasons I'm not seeing massive losses across my accounts right now is because I've built a balanced portfolio between growth, broad market, and value ETFs. My value position is mostly SCHD, which has actually held up really well this year and is even up around 10% at the time of this recording, which helps offset some of the volatility from the growth side of my portfolio. And that's the role of the value ETFs in my portfolio. It gives me a bit of stability when things get shaky, and it keeps me from feeling like my entire portfolio is getting crushed when the market pulls back. Now, for me personally, being 27 and still very much in the wealth accumulation phase, the majority of my net worth is tied up in investments. Because right now the goal is simple. I'm trying to grow this as much as possible over time. But as I get closer to retirement and actually needing to start living off my portfolio, that strategy is going to shift more towards wealth preservation instead of towards wealth growth. This is because once you're relying on your investments for income, A market downturn hits different, and that adds a whole different level of stress and risk. That's when your portfolio might lean more into something like SCHD, bonds, or even assets like gold and silver that can create more stability and income. And you can already see how different that setup looks like compared to a growth focused portfolio like mine today. But for probably 90% of you watching this, you're still going to be in that wealth accumulation phase. So the priority should be growth. That doesn't mean you need to go out and completely change your portfolio overnight because everyone's risk tolerant is different. But for me, I like to regularly check in and make sure I'm not even getting too passive with my investments. Because if I play it too safe right now, I'm leaving a lot of long term growth on the table that I cannot get back later. This is the part of investing that nobody really gets excited about, but this is where the real money is made. Because it's easy to invest when everything is going up and you feel like a genius, but it's a completely different game when your portfolio is down and the headlines are all negative. This is where discipline actually matters. So for me, I'm sticking to my plan, I'm continuing to invest, and I'm not letting the short term noise shake me out of something that I know works. If you can learn to stay consistent during times like this, you're putting yourself in a position to win. So that's all I have for this video. Leave a comment down below what you are investing in during this market downturn and how your portfolio is looking in 2026. As always, thanks for the support, and I'll see you all in the next one.